Hey traders, welcome to Charts and Coffee. Great to see everyone. Happy Thursday. Good to see you all. As always, we're going to be taking a quick look at what's going on the economic calendar. We just survived 2 days of Powell testimony, and that's that Humphrey Hawkins testimony where he's going to elaborate on the Federal Reserve's outlook of the economy. They're obviously going to discuss sometimes some headwinds, but for the most part, it's going to be we're on the right path. We'll respond as necessary. I mean, it really is fairly hilarious. However, what we do want to do as traders and investors, whatever hat we're wearing, we do need to take a look at the CME Fed Watch. So this morning will be really interesting because this is the stance of the Fed Watch after the 8:30 initial claims and after 2 days of testimony. And the takeaway, really taking all the macro of inflation and jobs and growth and anything else, all of it lands here. Because the only reason we pay attention to any of those things, inflation, jobs, growth, is because we want to know what the Federal Reserve is going to do next. Are they going to, back in the loose monetary policy days, are they going to keep money cheap? Now in this tightening cycle, when we're hiking rates, how much higher do we have to go? So the three questions are, what's going to be the peak rate? What's that number? What's that percentage? And then the second question is when? When do we reach it? And right now it's looking like it's still, for the most part, July, right? Looks like we're going to reach it in July or June, right? That seems probably June, actually. Maybe May? Nope, June. All right, so we'll peak in June at 5.5 to 5.75%. There is a little bit more hawkishness, obviously, after the Tuesday prepared remarks, where now the 5.75 to 6% target rate probability is about as prominent, is about as visible as it's ever been. So we can't count that out. Powell told us how we get there, if we are to get there. Data's got to still be good. So if we see a good non-farm payroll tomorrow, meaning better than expected, higher jobs, watch that 5.75 to 6% grow. Here's the thing. And by the way, the third question is, when do they cut? And we can start to see that the Fed Fund Futures is now populating next year. And it looks like we'll see a cut rather than November or December of 2023. Looks like it's being pushed out to the end of January 2024. So not a big adjustment. But here's what we need to know. If you and I are talking about this, that means that the markets at large know this. This is not a surprise. We were told to a certain degree it's been discounted. So it's no longer a surprise. And if we're able to maintain, and one of the things I mentioned on Tuesday's free video is that we didn't even take out the March lows on those Tuesday comments. Gang, that's pretty good, right? That is actually pretty resilient. Dare I even say slightly optimistically bullish, right? Let's not get out ahead of the fact that we're still in chop. That chop is that neutral multi-trend, and we are oversold. And we bounced off that oversold level on the 2nd of March. We have yet to take that low out. Again, this is not about predicting. It's about trading what we see, not what we think is going to happen in 2 days, 2 weeks, 2 months. And also accepting this is the market we have. Is it the one we want? No. But it is the one we have, and it is indeed tradable. Okay. So that's where we are as we go into non-farm tomorrow. And just a quick summary there. So let's jump into, as always, the questions. By the way, I did get some emails. Rog, where's the replay for yesterday's webinar? I believe you can catch that at simplertrading.com/clear. So I just want to give everyone a heads up because this is what oftentimes will happen. One is, well, Rog, I'll just wait for the indicator to be available. It's not going to be for some time. I need to support the folks who are going to be using it in this first class, and it's not going to be available right after the class as a standalone. Eventually, but no time soon. The other thing is, Lorna Bot does what I endearingly call the How Do I Make My Charts Look Like Raghee's session, and she's going to do that on Friday. All right, so if you do want to join us and you want to sit in on that tech session, there will be 2 tech sessions with this class. One on Friday with Bot, and then one with me before we start live trading. So we're going to make sure everybody's got that tech fluency with the platform, trading view and toss with the indicators and with my layouts. So you can check that out over at simplertrading.com/clear. And I think the webinar, yeah, there it is. And the replay's there. The replay's at that link. All right, gang, let's get into some questions. First up, Jack asks, would I consider it is a hot zone with FOMC bar scheduled to speak at 10 a.m. this morning? Absolutely. Terrific question, Jack. We head on over to the Forex Factory calendar or the Trading Economics calendar. And here we go. Here's FOMC member bar. It's not like Powell. It's not like Williams. It's not like one of those members. But clearly, yes, it will be one that we'll have to keep an eye on. Now, this will be during our day trading window. We still day trade. I know we've been talking a lot about the short-term swings. And I think what's really important is we need to, in this environment, be able to move from short-term, very short-term approaches to slightly longer-term approaches with less expectation for follow-through because we're not in screaming uptrends anymore. So the way we broke this down is I want to be able to do a little bit of everything, right? I'm not abandoning the things that are working. I'm just adding things that are working as well. So we can not be attached to 5-minute charts, not have to day trade unless we want to. Day trading has been going very, very well, but we can start to add those longer term. Now, bar might be, Jack, a little bit more of a longer term conversation where if he does create some volatility with that 10 a.m. hot zone, we might at least take a look at what those 1 hour and daily time frame, daily price movement range and mean reversion levels into the 34 EMA wave are. We'll see, right? We know it's on the calendar. It's a hot zone, scheduled, high volatility, high volume, high impact event. And my pleasure, Jack. Yes, I love doing that. I love doing the webinars. Look, when I figure something out that's really cool, I can't wait to tell you all, right? And I've had to, Lorna Bot and I tested this now for 11 months. And that's just the indicator. The process has been around for a decade. We've been just trying to break that indicator for 11 months. So I've been just dying to share that with you all. Yeah, I appreciate that, Jack. All right, question from our free trading room. All right, Kot is asking about, I always forget, is that good morning or you want to take a look at GM? You know what? Let's take a look at GM. I know that just might be good morning, but I have been keeping an eye on GM. And here we go. Here's General Motors. It was in an uptrend. It's segued into chop. It's trying to get oversold. And we have a pair of beautiful Darvis levels showing us that if we can get back down in this neutral environment to that layer of automated support, gang, listen to me now, believe me later, you can throw these on your chart that the Darvis 2.0, the Darvis 2.0 is available over at TradingView. You can go into the indicator section. Simpler has made a number of indicators free. That's one of them. That's an indicator that I've been sharing with the community since 2016 or 17. Throw that on there. Doesn't matter if it's an intraday chart. Doesn't matter if it's an end-of-day chart. Doesn't matter if it's a weekly chart. This is amazing automated support and resistance, and I'd keep an eye on that. All right. MBD. I think this one sounds familiar. I think we looked at this a day or so ago. So let's go revisit MDB. I think I mistyped it that day too. MDB. Nothing really here to do now for me. So let me show you what it was and then what the difference between momentum trading and exhaustion trading really is. And I am the latter. I'm going to look for exhaustion. So let me show you what this setup would look like. It's very similar to what I'm waiting for in GM. Neutral environment, oversold stochastic, waiting for our reversal pattern. The entry is as we break through the high, as you can see right here on this pattern. It's a minor low. So I can't do anything here, nor will I, right? But that's the pattern. That's the setup. Neutral environment, bullish bias, wait for the minor low. And I'll give you specifically what the trigger would be. It would be as it trades higher to essentially 213.71. As it goes higher through that level, give it a few ticks, but that's the setup. So today, not much. I won't enter here, but please remember, there's your 200 exponential propulsion. There's your Darvis sitting at about 237.5. So if anyone is long with that, definitely keep an eye on that. I don't play earnings though, gang. I think playing the volatility of earnings is just categorically, just again, my opinion, not something I want to do. It's just a bad idea. It's a very sexy thing to want to do, but it's just a very binary thing. Either you're very right or you're very wrong. I'd rather play the setups into earnings. So for me, let's say this is on the 6th, right? This trade set up on the 6th. So if earnings is when are earnings being released? I don't even know. What is it? But if I'm going to be following this trade to the upside, play the pattern, stay in it for 2 days, right? Which is basically taking the move from 213.70, whatever, to a time-based eject button. Take your profit, get out, then see what happens after earnings. So I'll play the lead up to earnings. I like to be flat at minimum 24 to 48 hours before the volatility. And then as the dust settles, we'll see if there's another setup. So I'm definitely not an earnings player. It's not something I find that's a high probability. It's very much a coin toss. And I'd rather play the setups before and after. All right, next up is, Jack asks, has my overall bullish bias changed with ZB and ZN turning double red? The way in which bonds have transitioned to a downtrend this month is disappointing, but it has the structure of a market going red doesn't necessarily mean we're going to see lower lows. You can see here the red grab candles have been dominant since the beginning of February. So the weakness is not a complete surprise, but the transition to a downtrend at this point is disappointing. But does it change my opinion? No, in fact, in a lot of ways, bonds did have to get bearish to reflect the higher yields because that's where the Federal Reserve has been walking us. We leapt there on Tuesday, but that's where it has slowly been walking us. So in that regard, no, it hasn't. So you're right. There's a disconnect at this point where I do want to see 3 things in tune. All right, let's go through those 3 things here really quick. Let's just use the S&P as a sort of catch-all reflection of NASDAQ and the Dow. Neutral, right? What about the 6E, which is the best way to look at what it is the US dollar is doing? If 6E is neutral, so too is the US dollar, right? So 6E is the euro, by the way, the euro futures, sitting on the 200, sitting on some Darvis support. Very important. That means the dollar also neutral and it's sitting at resistance. So that's going to be really important. The one thing that you're right, sort of is disappointing about that neutral look between S&P to euro is, of course, yes, what's happening in bonds. But we are not making lower lows. I think that's important. And we'll just see what happens next. And if we can maintain this zone, we'll probably find ourselves transitioning back into a neutral environment. But we know it's still bearish. So I'm not too concerned about that yet. All right, Jack, I'm going to still trade what I see. And here's another cool thing. If I'm concerned about the longer term implications of higher yields, or at least maintaining higher yields, I'll shorten the time frame, right? I can absolutely still day trade, or I'll go to those 1 hour time frames. So right now, if you ask me, Rog, would it make sense to say day trade in the morning like you do? Absolutely. And then use the short term swings in the afternoon in terms of setting up a 1 hour chart. That's really very much what we're going to talk a lot about on Saturday. All right, next up. Hey there, Stacy. Good to see you. All right, next question is what's in the mug today? What's in the mug today is MBC. This is, I've been getting this Vietnamese coffee. It's a Robusto. It's called an anaerobic Robusto. I got that with a little dollop of Manuka honey and some foam. Rocking a little latte today. That's what's in the mug. And a quick shout out to Paul Winter. If you're out there, thank you for the awesome mug. These are great. These are clay plant row mugs. Love this thing. Love this thing. Shout out to one of our members. Okay, D. Frank asks, I missed the webinar yesterday. If you missed it, no worries, gang. I know, these are at 8 p.m. I'll tell you what, that's practically past my bedtime. But if you missed the webinar, you can catch it. You can catch the replay at simplertrading.com/clear. I share new chart examples. We break down some contrasting charts We talk a lot about multi-trend. We talk a lot about market structure. And I just want to give everyone the heads up. The class really starts Friday with the tech session. Now, of course, everything is recorded. So if you cannot attend live, no worries. But I do want everyone to remember that, yeah, while I'm going to be doing the class Saturday at 1, the moment you do buy the class, you get all the indicators. You get the fresh set of DPMRs that we pulled this week. And you can get started even before the tech session, just sort of playing around with the tools, Who doesn't like new toys? All right. So you can check out all the information. And again, please do just check out the webinar. And I saw some, how do you sign up for the class? Solo, it's at simplertrading.com/masterclass. I appreciate the question. But, we do these webinars really for a really good reason. I want you all to know exactly what you are, what you should expect, what it is I'm going to teach. I don't want anyone not clear on the tactics and what it is we're going to do. And this is short-term swing trading. All right. I appreciate the question. All right. Next up is, let's see. Jimmy asks, is the slow stow free? Well, so yeah, straight up. I think I've mentioned this before. I've had glasses since I was 9. My vision was worse than my father's by the time I was about 11. I have terrible eyesight. And that's okay. That's okay. And then wonderfully enough, in my mid 40s, I developed cataracts. I don't see all that well anymore. My husband always says how good it is for him, right? So the indicators that I have on my screen, if you notice, they're sort of bold. They're color coded. I rely on that, gang. And it's really worked out great because in an effort to be able to actually see my charts, we've automated a lot. And in the automation, I can sit down with someone for 4 hours and say, what's the market structure? Well, I don't know, Ron. Do I have to pull up moving averages? No. What's the color of the multi-trend? Oh, that's yellow. My 9-year-old can see that. Cool. That's all that it takes. And then I did another thing with the slow stochastic. Rather than all those lines crossing, I just had Lorna Bot make me one solid line so I could see it better, right? So I say all that because the sector slow stow does have a few tweaks that I like, from an exponential setting to the 80-20 high-low range to a 21K 3D. But you can set that up, Jimmy. You can set up the garden variety slow stochastic on TOS, TradingView, whatnot, and throw it on your screen. I just made mine with a few tweaks and just easier for me to see. All right. So the sector slow stow is what you're seeing, and that is not free. The one that I use, the cataract version, it is a little bit different. The code is different, but I don't want you thinking that a plain old slow stochastic isn't built in, but this is not a plain old slow stochastic. I hope that makes sense. Again, I've tweaked it and I've made some changes to the way that it reads. But if you want to throw a slow stochastic on your chart, go for it. Okay. But by the way, Jimmy, you get it with the class. So if you're concerned about that, yeah, there's nothing else you need to buy. All the indicators with the class come with the class. Yeah. So I don't use Ready, Aim, Fire, Jimmy, so I won't speak on something that's not on my chart, but they are both going to be best used with the multi-trend, which also comes with the class. So if you're using a RAF, if you're using the sector slow stow, either way, they're both going to be far more accurate in a choppy market. Well, how do we know if it's a choppy market? Yellow multi-trend reading. That's the way that I do that. All right. Let's see. Next up, Sabrina asks, will the how to update indicator session? Sabrina, I'm not familiar with that. How to update the indicator? Oh, you mean with the class? Sabrina, no, the class is its own thing, right? So Sector Secrets members, you get 1 hour with the Lorna Bot every single Monday, right? But all the different class sessions are with the class only. But if you have a tech question, and you're a member of the Sector Secrets room, Mondays at noon, and this is anybody, right? If you've signed up for the class as of yesterday, you can join me here in about a minute, right? And you can check out the whole week's availability of sessions. There's a lot of them. And one of them is a tech session every Monday with the bot. So if you have a question and you're a member of the Sector Secrets, which all the folks who bought the class are, yeah, for sure. And if you're just a member of Sector Secrets, yeah, check out the Monday session. All right. Next up is I can no longer get Darvis Box and TradeStation. I don't get Toss. Stephen, yes, and I'll wrap it up with this question. There's two platforms that I support and love. Toss is not available to everybody, like you said. That's why I love to use TradingView. It's broker agnostic. You can still use a number of accounts, whether that be Interactive Broker, whether that be TradeStation. There's a number of brokers that you can loop at your API. I know it sounds all fancy, but basically you can log in, use the data that you get from that broker, like your futures feed, and power TradingView with it. On TradingView, all my indicators are available. All right. So if you're in that situation where, oh, Rog, I don't have Toss, don't worry about it. Everything that I teach in all those sessions on tech with the class, and even in the Sector Secrets Mastery, we definitely answer questions on TradingView. We have quite a few members, both in and outside the US, who use this platform. I'm an avid user of TradingView. I've been doing it for been using TradingView for almost 10 years now. So I would say check out TradingView, and that would be the way to go. I can't believe 20 minutes just flew by. Sorry, gang. But thank you for the questions. Thank you for the questions. I'm looking forward to seeing everybody on Saturday. Again, remember the tech session is on Friday with the Lorna bot. And then remember, everything with the class, gang, is different than the mastery, but you get the mastery with the class. You'll notice the different packages, 1 month, 2 months, 3 months. Check it out, simplertrading.com/clear. I will see you all tomorrow. Same time, same station. Be good to each other, gang.